I'd like to start by saying that need of intelligent capital in real estate and hospitality is really no longer an oxymoron. The gentleman on our right, on my right, through his innovative structuring and his very ingenious ideas has really changed the definition of this in a very short time frame. Mr. Jijina, welcome, and it's great to have another session with you.
Thank you.
I'd like to start by asking you that what made you venture in the hospitality space, especially in the last 12 to 15 months?
So thank you, Nikhil. But before I actually answer your question, I think it is very important to know how we succeeded in the real estate lending space to the developers. As you know, in the last 5 years, we have now a book of $8 billion and probably the largest developer funders of India. Many people have asked me this question that in such a short span of time, how were you so successful in putting up money and good money? It's not that, as I always say, anybody can put in money. It's the recovery which separates the men from the boys. And I think one of the reasons is the innovation, the intelligent capital which you speak about. I think, again, what is innovation? Real estate typically is a very basic industry, has been in this country for long. But we realized, actually coming from Piramal, from the other side, because we run our own real estate also, we realized there's a gap between what the developers want and what is the funding available. And that's why we came up with various innovative products in real estate, whether it was to do with slum rehabilitation in Mumbai, whether it was to do with apartment fund, because we realized in the last 3 years the velocity was an issue, and so on and so forth. For example, construction funding for an affordable housing project is far different from a construction funding requirement of a superstructure. So I think that was one of the reasons why if I look back, why were we successful? Now coming to your question, actually let me tell you a story why we entered the hospitality sector. Many few know about it. So in fact, as you know, we were in the real estate sector. So one of the developers who also has a couple of hotels came up to me, and it was really in a panic mode. And he said that, please help me. Otherwise, my lenders are going to take away these 2 hotels, and this is actually kept for my son. And you know the partnership model which we follow. And since he was already a partner with us, we decided to hold his hand, though we were not in the hospitality sector. Now, having entered the hospitality sector, we realized that why not look at this sector holistically. And frankly, Nikhil, we were quite surprised to realize that actually it's almost the same as what we saw in the real estate sector. So what do I mean by that? Again, we saw that it is the same templarized funding which is happening. There is no relevance of the funding structure to the cash flows of each hotels. And that's where we felt that there is an opportunity again with our DNA of always partnering somebody, of coming up with a solution for each hotel differently, or a developer. We saw there's an opportunity, and that's why we entered.
Going forward, do you still feel there's untapped?
Absolutely. I think I was hearing Mr. Amitabh Kant, who was speaking with attention. I think he said the same thing. Today in India, if one really looks at it, I think in the last few years, the hospitality industry is really doing well. And Nikhil, if you really step back and see how many new hotels are coming up in the next few years, not many. And that's why it's getting reflected in the occupation rates, the ARRs, etc. So, and again, coupled with the gap in the funding, the gap in terms of not funding, the intelligent funding. Funding is available, but not as per the requirement of the operators or the hotel owners. I think that makes us very positive and very bullish towards the sector.
So intelligent capital in hospitality. Can you further elaborate on this a little bit, please?
So let me explain. First of all, let's all agree, I'm sure all of you will also agree, that hotel industry is a highly capital intensive sector, right?
Sure.
And there's a long gestation period.
Yes.
You would agree that? Even when you put up a hotel, it takes a lot of time for the brand to get established for some time. Third,
paybacks are long.
I think if you really look at the equity available in the market from private equity, first of all, it's not there. And even if it is there, they want to get that money back in 6 to 7 years. Now that is not really what the industry wants. Let's look at the debt available in the market today. Again, there if you look at it, it's templatized lending, as I said. It has got nothing to do with cash flows. In fact, we saw a lot of situations when we looked at this sector that, in fact, the refinancing is being done at a costlier rate. Though the hotels are actually becoming more and more operational, it's a reverse. The developers or the owners are borrowing at a costlier rate or otherwise going into bankruptcy. And that is where we realize that there is an opportunity for us to look at it differently. So let me explain. You'll agree that each transaction is actually very different in our industry,
very
right?
Unique. Absolutely.
Simple example, the cash flows of a business hotel, to put it simply, is very different from the cash flows of a touristy hotel.
Resort.
Absolutely. But nobody has looked at that. To give a very simple example, and you will find it very, it's so simple, but nobody does it. When we started lending, the first thing we did was that we said that our repayments and interest should be in the middle of the month. Why? Because at the end of the month, the cash flows have to be used by the operator for so many things.
Agreed.
Why should you burden the owner to pay you during that time? It's very simple, if it makes sense.
Curated it.
The other thing, which is our partnership model, which we brought into this industry also, which we were doing in the real estate, is that in the beginning of when we do the deal, there is a performance-oriented interest rate. So in other words, if you perform,
sure,
we are happy to bring the interest rate down. So it's a step down, not step up. So these are the things the nuances we brought to the sector.
Accordingly.
And that's why we call it intelligent capital.
Very interesting. So what is your strategy for this sector? Are you going to limit yourself largely to luxury only, or are you going to play around the canvas, overall on the canvas?
So let me answer it.
Across.
First of all, we have divided the market into 3 categories. Category 1, obviously, the touristy places, the metros, and the cities which are doing well. Second is just the capital cities, and the third is the rest of India. The category, again, we divided the properties into 3 categories. One is under construction, second is operational but not yet mature, and the last is mature. It was very clear to us that in the category 1, which is a mature market, we are happy to go into any property, any types, whether it is in under construction, mature, not
sure,
mature, is fine. In category 2, we have to be selective, and category 3 are very, very selective. But one point I definitely want to make, we are speaking of properties, we are speaking of markets, but we are not speaking of the operators. In this business, we realized it very soon that we have to look at who is operating it also. So whether it is a good brand like a Taj, a Marriott, or it could be a Hyatt, you have to look at who is managing it. And yes, not necessarily we'll look at luxury. Ultimately, we'll look at these parameters, including the operator, to take a decision whether we want to go in or not.
Interesting. So I'm going to put you on the spot here. If you're going to talk about hotels here in Bombay today, which would be your, according to you, and a very candid response, which would be your absolute best hotel in the city? Say from town till the ceiling.
Now that's a very unfair question.
And then beyond the ceiling.
And that also in front of all these guys. I can see my friend sitting in front. He will kill me if I say something else.
We have lots of friends here.
So, okay, let me give a little diplomatic answer. So, ultimately, it all depends on your experience and where you are staying. So today, most of my time I spend in Lower Parel. So obviously in the city, I spend maximum of my time in St. Regis, which is a Marriott hotel. When I come to the suburbs, I definitely come to Grand Hyatt. So Hyatt, and of course our friend's hotel in JW Marriott, so which is also there. So I have covered, I think, more or less everyone.
But you know, when we've traveled and I've done some research, but whenever you're out of town, you're always staying at the ITC. Why is that?
Okay, so the reason I stay at ITC, I think many developers, operators have asked me this question when I travel, that why aren't you staying in our hotel? I think it's just the, maybe I would call it laziness or the comfort. Because in ITC, there is a particular room called ITC1, which I've got so used to. You know, when you go to an ITC1, I don't know whether you've used it, you can actually, you know exactly where even that biscuit is lying and which type of biscuit is there. You exactly know where the things are. So it just makes you comfortable. So that's the only reason. But not to say that the other hotels are bad. Just for your information, whenever I'm overseas, 9 out of the 10 times I'm in a Marriott hotel. So it's not necessarily ITC.
Well, we are talking about, thank you for that, but, we are talking about a very complex subject if you're talking about owners and operators here. And the relationship is a complex one. It's, one has the clear financial risk of the property, the other with his mighty or their mighty brand has the ability to manage it and the entire rights to manage it. But they get rewarded irrespective whether the hotel's making money or no. So it's a classic conflict. What is your view and your advice to ensure that this is a win-win between the two?
So actually, Nikhil, I do not really agree that there's a conflict. And in fact, if the mindset of conflict is there, I think neither the owner nor the operator will make money in the long term. I actually look at this model like in the real estate, we have a JDA model. Mm-hmm. You understand that the landowner,
of course,
he obviously gets his money on the top line, whether the developer makes money or not. But that's on paper, not really. I really think actually that both are very much aligned. If you ask me, I think both are really aligned. It's obvious that the operator has to have a minimum service because that's the brand. But then the operator also has to take in cognizance how to optimize the cost. It is the simple, I'm sure they know it. Similar for the owner, I think, it is very important that cost cutting is not the only thing. At the end of the day, the minimum service required by the brand for them to get the cash flow in is required. So really it's a long-term understanding and play as far as we have seen between the operator and the owner. In fact, let me tell you how we approach this sector. Mm-hmm. So for example, if a owner comes to us for lending, long-term lending of 10, 15 years, the first thing we do is engage with that operator, actually. And try to understand how is the relation, what is the aspiration of the operator, what is the aspiration of the owner. In fact, I'll tell you that, in fact, it was Marriott in one of the deals. We found that the agreement, the cash flow agreement was not strong enough for Marriott in the long term. So we insisted of changing that agreement for Marriott. Marriott didn't ask for it, we did it. Because we believe that everybody plays together. Whether it's the lender, whether it's the owner, whether it's the operator, you have to play together. And that is what makes it successful. So it's really a very aligned type of business, Nikhil. In fact, I would like to quote Mr. Sharp, the founder of Four Seasons, who said that it will take a lifetime to build trust and minutes to lose.
Sure. Well, I agree with those wise words. From a financing point of view, the meat and bones of several discussions are around valuation. The perceived valuation of a particular hotel from the owner's perspective is very, very different from that of yours and the lender's side. So this is a classic, contradiction. So what is your perspective what are your key issues and key points that you look at when you're considering a trade?
There's a famous saying which we all say, I'm sure you know about it, that the hotels are built on egos and sold on cash flows. Everyone knows about it.
Sure enough.
And I think, yes, that's a challenge. We have seen that. And our limited way of looking at it is that the perceived valuation really comes from where? From the owner, because he has put in money for the land, he's put in money for the construction. And I'm not painting the entire industry with one brush, but it's similar to that what used to happen in the commercial space or the office space in the past in India. Every landowner or the builder wanted to make a Taj Mahal. But you are in the business of cash flows. Even commercial, like a hotel, you are in the business of cash flows. At the end of the day, I think the owner, when he's making the hotel, has to be very clear. How will the cash flows stack up with sensitivities? So that's what we look at. For us in Piramal, cash flow is paramount. Again, in cash flows, you cannot look at it in the linear way. In the short term, you have to look at seasonality. In the long term, you have to look at the various cycles.
Cyclical nature.
Cyclicality, yes, absolutely. And that is what is paramount in this business. And I think many owners have gone wrong because of that passion to build something world class or the best in class or the Taj Mahal, as I would call it, forgetting that the cash flows in that particular region or that particular location will not stack up. And that's where the challenge sometimes comes. So we definitely go only on cash flows because that's the only way you can do business.
So, sir, what would be your current and future commitment to this sector?
So
as of date?
So out of the $8 billion which we have put in the real estate sector, around 500 million has been put in the hospitality. I think we have already said it in the press also recently that in the next 2 years, we should be around $1.5 to $2 billion, our portfolio in the hospitality. But having said that, I don't think that's our aim. It's not that we want to grow our AUM, because growing AUM is the easiest. I think we will continue to be very selective. And I think more than that, we would like to be remembered not for the AUM. Like in the real estate space, as you know, that we are remembered more for our partnership, for holding the hand in the difficult times. You know that in the real estate space, people will say that we hold our partner's hand tightly in the bad times and not in the good times. Everyone is there. We would like to be remembered, hopefully in the next 2 years, in this space as true partners who gave good solutions and creating a win-win solution for what, as Amitabh Khan said, one of the very key infrastructures, which is hospitality. You know, travel and hospitality is by far one of the most important sectors today India has and India needs. So I hope that we can play a small role in this sector.
Well, that's wonderful. You know, Manav, before we started out, said that we should be a little conscious of the slot. So, you know, I want to just mention one last thing, that we've always had a few sessions and we've always ended the note with a nice song or a nice musical. You know, what is your choice for today, for this afternoon?
So let me surprise you, because yes,
have I put you in a spot here?
No, you haven't, because I knew you'll ask me that question. And yes, you in the real estate space, and whenever I have been on the stage, I have shown videos and I have shown
there's nothing
songs. But there is something today. I was thinking which song to play today, because there's a very appropriate song, and I'll explain after the song is over, called Hotel California by the Eagles. So let's play that particular song, and then I'll explain why I'm playing this song.
Let's go for it. We need something like this in an afternoon like this.
Everything I remember was running for the door. Let the funny passage back, place I was before. Relax to connect when you are programmed to receive. And you can check out any time you like, but you can never leave.
So if you heard the lyrics, especially the last 2 lines, that you can check out anytime you like, but you can never leave and make money together. However, in my version, Nikhil, you can check out by prepaying anytime you like. And you can also leave, but I can assure you we'll make money together.
Well, on that fun note, you know, I think I've enjoyed this afternoon and this session with you, as I'm sure many of us have. But thank you for your time, Mr. Jijina. It was a wonderful conversation, and thank you. And I'm sure that we will continue seeing a lot of capital coming in from Piramal Finance and your platform into the hospitality space.
Thank you.
Thank you,
all.
gentlemen. Thank you, everybody.
Thank you.